But I'd now like to invite up on stage Brett, who's now the COO of Huspy out of the UAE. So thank you very much. Oh, and you need the remote control, which someone has taken. Can we have the remote control, please? Here we go, Brett. Okay.
Hello, everyone. This is my second Property Portal Watch event. The last one I attended was in Bangkok, and it was more in a personal guise. I just left a 10-year stay at China's largest proptech platform, a company called Baker. And so it was more of an Asian-focused event, so I was filling everyone in on the trends and kind of the things that were happening in China. I think people found it quite interesting. Since then, I've kind of broken free of that company, and I've rejoined another company in the Gulf called Huspy. And today I just wanted to run through what I think is a fairly unique business, share some of the insights we've learned from the company, and kind of go a little bit back to the future, because I know that the tension between platforms and tech-powered agents and who can take value from who has been a kind of long-standing debate within this industry, and we'll share some high-level insights on that as well. And then right at the end, after I've introduced how the business works, I thought I would just tack on some stuff about China as well, because I do frequently get asked by people, what's happening in China? Can you share some of the technology that's coming out of China? Because it is a little bit of a black box for most people who haven't lived in the country or don't speak the language. So they're my 4 points. The first one is, what is MENA? It's a bit of a hybrid term. We like it because it covers where the company's from. The company was founded in Dubai in the Middle East, but we really see our future in Europe. And I think it's an opportune time for proptechs to think that way, especially ones that have started out in the Gulf, or even ones that are in Europe, because these regions have never really felt more close together. I know in the room or attending the conference, there are a few people who are based in Dubai, which is kind of the biggest city in the GCC. And they will tell you that since maybe the first half of last year, there has been a kind of an unrelenting inflow of expats, particularly from Western Europe. So a lot of people who are relocating to the Gulf, and in particular Dubai, to work, to invest, to start a business. And that's also reflected in capital as well. So we're at an investor event a few weeks ago in Singapore, and I really think this is the first time that the Gulf is attracting attention from institutional capital. Obviously, there's always been a lot of sovereign wealth in the region, but I think this is the first time that really kind of blue chip investors are looking at the region and thinking if there's any value there. And there have already been kind of a handful of platforms that have done well in the Gulf, in the Middle East. Tabby, which is a buy now, pay later platform. Kareem, which is kind of the Uber of the Middle East. Noon, which is an e-commerce platform. And then, of course, a Property Finder and Dubizzle Group, the Bayous. So I think that these regions are coming closer together over time, and there's a real increase in connectivity. And we saw that opportunity, and we think at this stage, there's a lot of stuff that's kind of cross-compatible across those two regions. This was the second point I wanted to discuss. And as I said, it's a little bit back to the kind of future argument, because this debate about who can extract value from who, and whether one side of the proptech equation can knock the other one out, has been a long-standing kind of debate. In other words, can platforms get so deep into the transactions that they render agents to some extent irrelevant or less valuable, or can agents kind of do a home run around the platform and take away the one thing that platforms consistently deliver, which is cheap traffic, right? So I feel that this has been a discussion in this industry for a couple of years. I'd like to share a few high-level thoughts. And maybe because I've been in the Middle East for a little while now, this metaphor occurred to me, comparing a petrol station and an oil rig. Well, it doesn't necessarily have to be an oil rig, but kind of an oil exploration firm. And in this metaphor, we can understand the petrol station as being the classified player, right? They're a very, very efficient point of delivery for petrol. They're well known, they're easy to find, they give the consumer what they need quickly, and they take a small clip off the top. They may even offer you a few auxiliary services on top of the petrol that you're filling up in your car. So they might do some low-level maintenance or wash your car or even sell you some goods that you might need. But that's kind of it. They're very kind of resource-light, low headcount operations that can be quickly moved around. The oil rig, on the other hand, which is, in my estimation, something that reflects more closely what we're building at Huspy, which is a tech-powered agency. It really reflects the agent's work, right? Which is the sourcing of sellers, basically, and connecting them with buyers. Now, this is a much more complex operation. It's much less mobile, and frankly, it's much less efficient as well. It takes a long time to set up. It has to run for a long time. And every little component of what is a very complex mechanical organism has to work in sync. So, at a very high level, I think that the petrol station side of the equation appears very, very saturated, right? In other words, in most mature markets, there's a few platforms that people know and they trust and they can find easily. On the other side, there's a lot more value to unlock with helping agents become more efficient in sourcing, to extend this metaphor, oil, right, and refining it, and helping agents do less and make more. And this is one of the bets we're making at Huspy. And there's a couple of key reasons why I think that's still the case and why it might continue to be the case. This is a reflection of the US brokerage ecosystem. And you can see here, each agent is still juggling 9 different providers or tools or pieces of technology. And that's in a very mature market with some very large players who are able to kind of bundle these technology solutions together. But it's a big pain in the neck for agents because it takes a lot of manpower and sophistication they don't often have to piece all these things together. And the truth is, the more fragmented the market, the more tools they have to juggle, or they have to leave the tools on the table and do things manually, which makes things even more inefficient. So we can say here the US is probably the gold standard for streamlining these technology solutions. But if we go to the Middle East or you go to continental Europe, that 9 number as a ratio of the number of tools used will probably go up. The other point I'd like to make is it's still a truism in our industry that sourcing a listing or sourcing a home or a seller is very much an offline process, right? And this graph bears that out. In other words, we all know that 97% of buyers start their journey online, right? But we know from our own experience or from kind of speaking with friends or other kind of communications we have with people that finding an agent to sell your home is still kind of very much a word of mouth proposition. We all have heard those anecdotal stories of, I want to sell my home, I tap into my circle of friends, or I reach out to the last agent I contacted, and I typically work with them no matter what. But it generally starts in an offline setting. So to go back to my earlier point, there's still a lot more room to digitize that process of finding sellers and therefore make agents more efficient. In other words, agents have to do less manual work to uncover these sellers and then connect them to buyers. And this graph, I think we all know very well, the general real estate ecosystem still remains very offline and very undigitized, for lack of a better term. So relative to retail, which has a digital penetration of 20%, or transport mobility, which has 5%, real estate is still at around 1%. So to draw it back to what I was saying before, we think that there's a huge opportunity, there's a huge amount of value to be unlocked in helping agents do their job better, even in markets that we might kind of, at the front of our mind, think are already fairly efficient and mature. This is another reason I think is interesting as well. If we look at the bubble of where market opportunity is, this is available TAM in the US. Real estate commission still is kind of the cleanest or most divisible piece of the pie. And if we look, there are bigger bubbles on the busier side of the graph, but either they're very fragmented, the price to play is very high, or they have already moved online. For example, home insurance, title and escrow, etc. These are services that are already reasonably accessible online. Whereas real estate commission, for the reasons I just outlined, is something that still involves a heavy offline component. All right, so that's a bit of a high-level summary. I hope that made sense on why we think the agent side of the equation, in other words, the seller side of the equation, there's still more value to be unlocked and created rather than a classifieds play. And now I'm going to go into a little bit about Huspy. The company was founded in 2020, so it's only a 3-year-old company. And we have operations in Dubai, where the company was founded, and now Madrid as well. So a couple hundred people in Dubai, and we have a reasonably sizable team now in Madrid. And it's been a very successful enterprise so far. Revenue has basically doubled year on year, and that's off a fairly high base. We'll double 2022 revenue this year, and we expect to do so next year. So for the reasons I'll describe a little bit later, the company's been very successful at doing one thing very well and kind of catching lightning in a bottle, and now we're extending that experience to other markets and other verticals as well. This is for our UAE mortgage aggregator, which I'll explain in the next slide. So in 3 years, Huspy was able to capture 25% of the mortgage market in the UAE. In other words, for every 100 mortgages done in the UAE, 25 are processed through Huspy. And guys, you should bear in mind that the UAE is a little bit unique in 50% of people who want to get a home loan default to their own bank where they do their everyday banking. In other words, the place where I have my debit card, if I need a home loan, I'm just going to walk up there and get a home loan from them. But as we all kind of understand that the bank you work with every day doesn't necessarily have the most competitive home loan product. In fact, most times they do not. So we've captured a very sizable market share, and that's also reflected in the GTV we've produced over a 3-year period as well, $3 billion US. So as I touched on, the company started as a mortgage marketplace, a mortgage aggregator. I can explain that in very simple terms. So you're a mortgage broker. You're someone who helps people get a home loan. You identify a client. You collect some basic information about the clients, bundle it up, and through an app, you submit it to Huspy. And then we take it the rest of the way. Using a mix of technology and our relationships with the banks, we're able to deliver mortgage brokers faster speed. In other words, their home loan gets processed much faster, quicker than anyone else. They get better splits from the bank because we have a good relationship with the bank because of the volume we do, and also product depth. I mean, as with most parts of the real estate ecosystem, mortgage brokers are typically very small, right? Like a couple of people. They'll normally only have relationships with maybe 2 or 3 banks, whereas we have great visibility over the whole market. And so if it's a complex case or it's a client who has particular requirements, we can match them up with the best mortgage solution or the best home loan. And it also means that we're able to bring products to the market that other people don't have. So in the UAE, for example, we've just released a 2-week mortgage. The normal turnaround time for a mortgage is 45 days. So through soaking up all this mortgage broker business, aggregating it, and then giving it to the banks, we've developed what is a very favorable model for both brokers themselves and the banks. In other words, the banks don't need to source their own business as much, or they certainly don't need to spend money on marketing or BD to go out and find new business. And the mortgage brokers are doing less, but making more. So this has been a very successful business vertical for Huspy. And I'd like to make a point here as well, I forgot to mention as well. The 2B element is very important. In fact, if we look around the world, there's rarely an example of a mortgage marketplace or a mortgage aggregator that's been successful at scale by working directly with consumers. So for example, Better.com, which is a US player, they basically use the same playbook. They rely on 2B channels, in other words, mortgage brokers and other people with home loan applicants, rather than going direct to the market. We do, at Huspy, have a small direct-to-consumer business as well. In other words, we employ our own mortgage consultants who go and source their own business, and they do it in-house as well. And off the back of that, in the UAE, we've been able to build a very successful real estate operation too. And that's built on cross-selling. In other words, someone comes to Huspy, they can get a home loan and then get a home as well. And so we're extracting value twice from each customer. So in the UAE overall, a very, very high-performing business, high-growth business, and something that's very scalable. So as I mentioned before, we have an operation in Spain where we operate under 2 different brands. Huspy, which is a real estate brand, and it works a little bit differently to a traditional brokerage, and I'll go into that in a few minutes. And then Baytecker as well. Baytecker is basically a mortgage provider that relies on technology to provide more transparency, more efficiency, and better services to people who want to buy a home and get a home loan. The real estate business in Spain, I think, is pretty exciting. I think it's got a lot of potential, and there's one reason I say that. Because the way the deck is stacked in a lot of European markets is very much in favor of the agency. If we look at this, I've kind of broken down the value that each party takes in a transaction. You've got the classifieds or the marketing providers who kind of soak up a little bit of value at the beginning of the transaction. And in a market like Spain, the big legacy brokerage firms, they'll take up to 80% of the agent's commission away. And in return, they'll offer the agent a base salary. But the result is the agent really only keeps a little bit of the value they create. Whereas that's a little bit upside down compared to how we normally see these markets work, right? So normally the agency just takes a clip through. In the US, it's 10 to 15%, and the agent keeps the bulk of the value created. Now, our bet here, or our theory here, is that in Spain there are enough agents who don't like this model and would prefer this model. In other words, there's a huge group of freelance agents who want to keep more of the money they make, and they need better technology, they want better support, and they basically don't just want to settle for a salary job. And I must say, we've run this for 6 weeks now. It's a fairly new business, but the amount of traction and cut-through we've got in the market has really surpassed my expectations. In other words, I think there are a lot of people in Spain at least, and I believe it'd be similar in other European markets because the dynamics are quite similar. There are a lot of agents who want to keep more of their own money, and they want better technology, and they want a higher degree of freedom that other real estate agents who work with platforms generally enjoy in other markets like the US or Australia or Canada, etc. And we don't necessarily need to split out 80%. We can split out 3x what they would get from a legacy broker, sustain a very healthy margin for the business, and the agent has tripled their income. And these are freelance agents as well, so they're fairly autonomous, and we provide them with a very good app that they can use to manage their workflow, and kind of like we did in the UAE, make them more efficient. In other words, they can do less work and make more money. So this is the app. So the end goal here is to create an app that basically can do most of the real estate workflow. And while this might sound like something that has been tried before, and it has, no one's really cracked it at scale. But I have a very good feeling about the traction we're getting so far in Madrid. A lot of agents are walking through the door and saying, I'm interested in this model. And I think we could end the year with a couple of hundred agents. That's the kind of scale I'm talking about. And by the way, in Spain, the market is insanely fragmented. The top 4 players have less than 5% of the market. So there are a lot of people floating around there looking for a better option. As some of you might be aware, there's no licensing requirements in Spain either. So there is a whole kind of there's a very diverse group of people interested in being real estate agents. And the same is true across Europe. In mortgages, I'll skip this because I'm running short of time. But basically, we have a good feeling that similar dynamics will be applicable to the mortgage market in Europe. Quickly on China, I only have 2 minutes left. And I know AI has been a kind of a theme that's run through the conference. The platform I used to work for, Baker, is making 2 big bets on AI. One is digitizing everything within the 4 walls of the home and winning that share of the wallet, right? In other words, buy a home through us, pay us commission, we'll renovate your home, make money from you there, and then we'll fill your home with furniture, white goods, and other appliances that you might need. I don't know if anyone can guess how many objects there are in an average US household. Around 20,000. So there are a lot of, and it's not to say that everything can be sold through a real estate platform, but there are some bigger ticket items that the platform in China feels very confident that consumers will like, and that they feel comfortable working with a proptech platform to acquire or purchase. And the great thing about that model is that every 3 or 4 years, the company can switch out those appliances or big ticket items and therefore create something like a recurring revenue business, which is basically a big weight around the neck of most proptech players because we only meet our customer every 10 years when they want to buy or sell a house. So that's one angle. And I don't know if this will work. This is the other one. And I think this is already being done by some people in the room. I think the company in China does it probably pretty well, maybe better than anyone else. That floating little character is an AI assistant. And because we know so much data about each dwelling, it can automatically take you through each home, tell you about the community, everything nearby. And this is fully automated for every listing on the platform. And then it gets to the point where it can even start running you through the things you'll need to do to create a transaction if you want to go through and purchase the property. So this is a small step in de-aggregating the value of the agent. So the agent will focus on other parts of the transaction. So you can see here it's already starting to introduce you to the costs associated with buying a home. That's my time today. I thought I'd just add that at the end because I find it quite interesting and people ask me, as I said. And I want to thank everyone for listening. I hope it wasn't too boring. I look forward to listening to the other presentations throughout this afternoon. Thank you.
Brett, thanks very much. Got some questions here. When is the best moment for every marketplace to expand to other countries? When is it too early or too late, based on the experience you guys have had?
Yeah, look, I think that, and we look at the dynamics for most marketplaces, they'll have an anchor in a big, because real estate's very concentrated, right? In any given country, you'll have 2 or 3 cities which account for anywhere from 20 to 30% of overall value. For example, Madrid is around 30% of all of Spain in terms of real estate GTV. So if you have a strong market presence in a dynamic market that can keep paying the bills, I think that's the opportune time to look if there are other markets where the dynamics of the industry would lend themselves to your model. Yeah.
Okay. Next question. Anything you took from your time in China with Baker that's been really useful or relevant to the UAE or Spain? Is there any crossover?
Yeah, look, I think so. And what the company in China did very well is they first built the 2B web, right? They described it as they have a platform of 2 webs. One focuses on agents, right? And they spent 10, 15 years investing in working with the best agents and then making those agents 3 to 4x more efficient than the market. So they had a lock on listings. And then they were able to jump forward and create a consumer-facing platform. So from that company in China, from its inception in 2001, it ended up divorcing with the biggest classified in around 2012. So really hone the relationship with the agents, become very efficient at managing agents, make sure the agents consistently deliver, and then you open up a world of other opportunities.
Okay. Question here. Please elaborate on your point about no one's cracked mortgage brokerages at scale.
Yeah, so there's I think the one that will come to mind for everyone is these kind of click and compare mortgage marketplaces, right? And we're very familiar with them. But their source of revenue is basically a referral fee, and it's very small. So we'll look at Bank A, Bank B, Bank C, you'll put in your number and then you'll get referred to someone and they'll end up referring you to a bank. No one has really been very successful with that model in terms of creating billions of dollars in value. Whereas our model, we're involved in the transaction, and our revenue actually is either from the customer or from the bank. So we have a lot more room to play with, and we can move up and down depending on what the banks are offering and our relationships with the bank as well. I mean, America is the best example. Better.com, that is a model that's built on working with 2B channels and not 2C channels. It works a little bit better for refinance. In other words, if you want to go straight to consumer for refinance, there's more scope there, but for people getting their first home loan, the first port of call for most people is their real estate agent or a mortgage broker.
Okay. So one other question, but it's not there.
Right.
But from me is, in the conversation I had with Andy this morning from CoStar.
Yeah.
Right, and he's talking about how from his perspective, everything is sort of moving to be more homogenous.
Yeah.
What's your perspective coming out of the Chinese market into Dubai market, now looking at the Spanish market? Do you see that over time that's going to become almost like one platform could fit all, or do you think they are quite unique?
Yeah. I think that's exactly. It's kind of weird, and it's almost kind of contradictory. I think at the same time things are going to become bigger and smaller. So we're going to have very, very large aggregators, and I think they're going to focus on the potentially faster selling low value properties. But then there's going to be a massive niche, if I can put it that way, for people who really want to provide high quality service to people who actually care about it. So that's how I see it going. I think, let's just call it the bottom 60% of the market will become more homogenous, and then there'll be scope for people who provide extra service and kind of really high quality customer care to people who are sophisticated buyers or sellers. Yeah.
Okay.
Yeah.
Brett, thank you very much.
Thanks, Simon.
Love what you're doing.
Thank you.
And thank you for sharing your thoughts
Thank you.
again. Thank you.